This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. You are listening to the Daily Market Wisdom with Nick Santiago. Today is April 14th, 2020. This is show number 12. Well, Nick, we are back here, kind of just like what you've been saying. The market looks like it's kind of stabilized. We've got some macro stuff going on, which really kind of clouds things. I mean, earnings season, JP Morgan Chase was down 69% on their earnings. J&J and Wells Fargo, where are we at here?
Yeah, so earnings season kicked off today. The financial stocks are all pulling back a little bit. They started the day out decently strong, but again, they've run up into the earnings announcement. The earnings announcement was exactly what we've been talking about, very cloudy. These guys really don't have an idea of how this is all going to play out. So basically, the earnings announcements are not going to be very good, and the market kind of knows that. But as we say, I like to look at JP Morgan as the leader of the group, since it is really the real Bank of America, as I call it. But it ran up into the 9th of April and got almost to that 105 level. Today it's backed off, trading at around $95.70. But I'd be interested in owning JP Morgan here in the next week or so, depending on the pattern. So I'll be watching that one. But that's definitely a stock that I'm going to get interested in. I think it does have upside potential to maybe 110 to maybe possibly even 120.
All right. So what kind of entry point you looking for there?
I'm not so sure yet. It really has to do with the pattern, but we've now had a 2-day pullback from the peak on the 9th of April. So if we could get a little bit more of a pullback and produce a higher low pattern on the chart, and that's a certain formation that does come along, you get that formation, this stock definitely goes higher.
Definitely goes higher. And so is Wells Fargo, are they kind of in the same boat? And the other banks, they're kind of doing the same pattern, right?
They all kind of are doing the same pattern, but JP Morgan is by far the leader of the group. Goldman Sachs is going to report earnings tomorrow. That stock is pulling back along with JP Morgan today, but the pattern on the chart for Goldman is already strong because we've had a 3-day base now, and that tells me this stock could go to 205, 206. So Goldman is actually looking very, very good on the charts, and it's actually been a strong name. But that's another one I'd look at. Wells Fargo has been one of the weaker names. I actually made money on that last week with call options on the big pop that the stock had to around the $34 range. Now I'll watch it again and see what kind of pattern we get there. But, yeah, they're all following the same pattern. But if you're going to look at one, I prefer to look at JP Morgan because it is really the leader of the group.
Yeah.
Today when that stock started to fall, all the other stocks started to fall as well in the same industry group. So, again, JP Morgan is by far, in my opinion, the most important stock in the financial sector.
Yeah, agreed. And I guess Jamie Dimon is back, and well, we'll see where it goes from there. Oil, oil's trading lower again?
Oil right now, if you take a look at crude oil, it really has been pretty weak since we've had that OPEC cut. So as you know, OPEC cut oil production by 9.7 million barrels a day. It's going to last for about 2 months. Today we have crude actually down another $1.23 to $21.18. But I have to say, I'm watching this pattern unfold in crude oil, and it has me a bit intrigued because stop loss will be so tight, we won't have to worry about it too much. Put a stop loss below 19.27. But what it didn't do today, it has not given me a buy signal. So I'm watching for a certain setup. If it gives me a buy signal, I will be entering the oil market on the long side. But it has yet to do that. So we're keeping it on the radar here.
Right.
But I have not gotten in on the long side here for crude. But it's an interesting pattern. It's a pattern that I like because I have such a small risk. at stake. But I'm keeping it on the radar. As soon as I get a buy signal in this, I will be entering it.
Interesting. What do you think it could pop to potentially?
Well, I think it goes, back to $30. I think that's going to be a real stall out point. But after that, it can actually trade back up to 36 or 37 bucks. So that would be the ultimate target for me. Maybe others might want to stay in it longer if that were to happen. But for me, that would be all the upside that I see.
So options play or ETF play?
Both. You could do it both ways. I'm unsure how I'm going to do it, but like I said, I just need to get that buy signal pattern formed. It could be close, but I'm just keeping it on the radar here, so I don't know if it's going to play out and trigger today, tomorrow, or maybe towards the latter part of the week. But the setup is forming. It's just waiting for that last final touch where it gives you that real crisp buy signal.
All right, and I think you're probably right. Every dog has its day, and this oil's been a dog for 2 months now.
It's been terrible.
3 months.
It's been terrible. I mean, it's gone from 65 bucks at the start of the year down to 20. It even went below 20 on a couple of occasions. So, it's been a dog with fleas, and we'll see if we can clean it up with the right chart pattern.
And the best cure for low prices, as they say, is low prices, right?
That's right. That is the best cure. But the irony here is, even though it looks terrible, there, everything has its bounce. Everything eventually gets some buyers. And like you said, low prices bring people in. And again, it's not like the world isn't going to use petroleum. I mean, just think about. I was just reading an article the other day. They said these N95 masks that everybody's going crazy to get. you need a lot of oil to build those to produce those masks.
Mm-hmm. Yeah. Well, there's everybody is. I think the death of the petroleum industry has been greatly exaggerated. Restructuring, sure, but it's the kind of thing that petroleum demand, once the country reopens and the world does, that could spike like within days. And then we're going to be seeing that the inventories are too low. And then that extra 9.7 million barrels will come right back into the market, right? It's not too hard to envision that happening. And finally, gold, still in an uptrend, but there's trouble in paradise, huh?
Well, it's not really trouble in paradise. It's just getting extended now. So remember, about a week ago or so, we were talking about if you put the protractor next to the screen, that you'll see when a stock or in a commodity, it doesn't really matter, any equity, when it goes parabolic, that's a telltale sign that it needs to pull back. Gold, the uptrend in gold is very, very strong right now. It's probably one of the strongest trends we've seen. Really, it bottomed out in 2015. It's made higher lows. It's done all the right things to go higher. And, here we are, spot gold right now, trading at around $1,770 an ounce. You're coming up into a big whole round number at 1,800. That's a psychological resistance point. But the way we've gone up there, I mean, we've gone straight up. Now, I understand the reasoning. You have central banks printing money like it's no tomorrow. You have stimulus programs. I mean, let's just call it what it is. The central bankers here have, basically monetized the economy. And they've thrown so much liquidity into the system at this stage of the game. That's the reason why gold is spiking the way it is. But at this stage, we got to get it to come down. I think when it pulls back a little bit or stalls, then we'll see gold continue its run. I don't foresee this upside move stopping anytime soon, but it does need to take a breather. It's just the same way as if you and I were to go, say, to Colorado and we go hiking and we decide that we're going to run up the mountain instead of just take a slow hike up. And we're going to run out of breath, and we're going to probably need to come down from elevation there and, let our lungs fill up with oxygen again before we could resume the move back up to the peak. So it works the same way.
Yeah, I got you. It makes complete sense. And really, we're just seeing it play out before our very eyes, the scenario we always knew was going to happen. Silver, Silver has been gradual. It's been going up. It's mid 15s now on the spot. So what's
Yeah.
silver? What are you seeing there?
So silver today is up pretty nicely. It's up almost 4% at $16.13 an ounce on spot. Silver still is the redheaded stepchild, but I love what silver's doing. I don't want to see silver pop too soon. I like the fact that it's gone up in more of a gradual sense. When you look at spot silver, the real test is going to be around that $17.50 to $18 level. When it does get above there, and it can base there, that's when it's telling you the next major move is going to take place. What a lot of people don't realize that silver back in 2011 traded as high as $50.
Right.
Here we are with silver trading at 16. So, there's a tremendous amount of upside, but we've got to get above that 1750 level. Then it will test 20. 20 is a big resistance zone. Then, you watch for pattern again. You let this thing give you some kind of consolidation or basing pattern. Then it ultimately, can move into the mid 20s. And then after that, it really is sky's the limit. But at this stage of the game, it still has a lot of work to do, but it's doing everything right. I mean, it's been a tremendous producer, or a tremendous mover, I should say, really since we had that big dip in mid-March. I mean, just think about it. Silver was as low as $11.64 on the 18th of March. It's now 16.08, so it's moved up quite a bit.
Yeah, yes, it has. My partner Bill thought it was going down to $8 at the time. I said, just buckle your seatbelt. This is normal. It's expected. We got liquidation going on in the markets, and it's just a fact of life here. Never thinking that gold was going to recover as quickly as it did. It was barely a blip for gold. And then to go on to
that's
records.
Exactly what it was, a blip, but it was a great buying opportunity. I remember being on your program telling everybody to get into gold miners at 19.
Yeah, GDX.
And that wasn't very long ago.
GDX, and it's at, what is it now, 32?
31 and a half right now.
31 and a half.
It's pretty amazing.
Yeah, and it was as low as 16, but it was catching a falling knife. You could not get in there fast enough to execute the trade.
Yeah, that's exactly what it was.
Yeah, so sometimes these numbers look real attractive, but they're deceiving because nothing is trading at that number. Very few shares or contracts are actually trading because the market's so out of whack. And so
I remember that day, when I got into the gold miners trade, that day, which was the 16th of March, I was chasing it up. I kept putting a limit order, and it was just going up so fast when it traded as, down to the low 16s. I actually got filled at, the low $19 level, and, it wound up being a 2-day trade where I made 20%, but it was just unbelievable to see how quick the buyers were coming in there.
Yeah, so we were talking pre-call, and one of the frustrations of the trader is you have to follow this discipline no matter what, even when it's to your detriment. And here, gold kept going up. It hit 32, I think, earlier today. So it's a little frustrating, but it's kind of the nature of the game, huh?
Yeah. That sometimes the only other thing that you could do. So I exited my GDX position on Thursday. Markets were closed on Friday. I exited it on Thursday, and here we are. It's a Tuesday, and we went from basically 29 to 32. So you miss a few points, but you have your initial target that you're looking for, and the other option is to just stick with it and put a trailing stop in. I'm kind of like, I try to think I'm a sharpshooter sometimes, and I just try to get the bulk out of it, the bulk and meat and potatoes out of the move. And again, now I have to wait and let it reassert itself with a pattern, and then I'll get back into the trade. But yeah, sometimes as a trader, we don't always catch the entire move, but we get the meat and potatoes out of it, and sometimes we leave the dessert on the table.
Yeah. Well, you mentioned you've had occasions where a security, whatever it is, has gone up, 20, 30 points, and you've been in there multiple times and you've gotten out more than that, 35, 40 points on a 20-point rise. So
Yeah.
that's the flip side, right?
That's the flip side, and that's something I try to do with the GDX as well, because I know its trend. I know the primary trend there, so I'll stick with that primary trend. And what I'd like to do is I like to buy pullbacks, and I've done that in numerous occasions. Most famous, or I should say, the most popular one I did it was with the home builders back in 2005, 6, and 7. But yeah, that's what I look for. I look for that primary trend. When it pops, I get out at the resistance level, then I wait on it like I'm waiting now for gold miners again, and then I'll get back in that after it pulls back, and it gives me another buy signal.
And we know, according to the research of some cycle people, we know that gold is on roughly an 8-week cycle. Is that your findings there?
Well, for me, it really all depends. I don't use time per se, like every 8 weeks it's going to do this or that. What I like to do is just look at the chart pattern, and when it gets into a certain level with a certain formation, that's where I look to get in. But when I look at the bigger time frame cycles in gold, you had that big run from basically 99, 2000 all the way to 2011, and then we had a 5-year pullback, and that's really all it was. When you went if you take a look at gold futures, you pulled back from 2011 to late 2015, January 2016, and now we're back in that uptrend again. So for me, I break these things up into really minute time frames, starting from yearly, quarterly, weekly chart, monthly, weekly charts, all the way down to 10-minute charts. So,
Right.
it's not necessarily just 5 weeks for me, but, some people may look at, or 8 weeks in your case, but, it really is just more about trying to put the bigger picture together with the smaller picture. And then when it all comes together, you really have a winning scenario on your hands.
Yeah, yeah, I totally understand what you're referring to there. It it's just amazing that it keeps repeating itself, and so few of you out there take advantage of it. And I guess that's the key: is understanding those patterns, understanding that they're going to keep repeating, and just be prepared for when it makes its inevitable move. So we got a couple of stocks to check out for one of our members. I couldn't quite figure out his name. He didn't sign it with his name, just an email address I don't want to mention. But number one, he said, Hershey, I'm going to put 6% of my portfolio in Hershey if the price drops to 120. And what's your take on that, Nick?
Well, first off, we got to see how it gets into 120. But I would go ahead and say at this moment, if it were to do that, and I don't see it getting down there personally, at least right now, but it does look pretty solid. 120 is definitely a very good level. The stock bottomed out at around 110 on March 23rd, like everything else. So, if it did get down to 120, that would be a very good retrace area to get involved in the equity at the moment. But one thing I just want to point out to him and to all your listeners is you really always want to see how a stock gets into a certain level. Before 120, I would actually get interested in Hershey at 130. So I think 130 is a very good level if it did pull back there. Right now the stock's trading at 146, and to me, barring the earnings announcement, I never know what's going to happen after that. But I mean, I would think this thing wants to get into the 152, 153 level from the current pattern that's in place at the moment.
All right. And then the second one is Stanley Black& Decker, SWK. I'm going to put 4% of my portfolio if the price drops to 100.
Yeah, so Stanley's been a strong name already. The stock was down at $70. It popped all the way back up to 120. It's sitting at 116 now. I really like the 100 level if it did get there. So I would have no problem with that. And what you would do is on a stock like that, you'd probably put your stop right below the $80 area. It's still kind of a big stop loss. Unfortunately, when you have this kind of market, you have to do that. But I would say the 100 level looks pretty solid, but you always want to see how it gets into that number. You want to see what the pattern looks like. And I'll give you an example of what pattern you don't want, and this is pretty easy to visualize even if you're not looking at a chart. If a stock gets down to a certain level and it starts to consolidate above that support level, you usually want to look lower. That's just a good heads-up sign because that's what markets do. That's the ebb and flow of markets. They run up, then they consolidate, then they run up again. Same to the downside. If they come down and they consolidate, they're looking to make a resuming down move again. So I think that's pretty important for traders to remember. It's a very, very important lesson. It's something that I teach all of the In the Money Stocks members almost on a daily basis. I repeat it every day. It's that important.
Yeah, so let's just reiterate that and focus in a little bit. So if a stock moves up and then it consolidates above where? Let me just get that clear.
Well, if it consolidates below a resistance point,
below.
It's looking to go higher. Okay. And on the flip side, as above, so below, when you're looking at down moves, if a stock pulls back and it consolidates above a support level, then it's actually looking to go lower.
Really? Wow, that's pretty profound. And just knowing that little piece of information can save you a fortune in losses on stocks that you might not be trading, but going in longer term, right?
Absolutely. And in fact, I get dozens of emails every day saying, I can't believe you taught me that. It was so simple, and I've never seen it or realized it. And, I members thank me every day for that. And that's been going on for, over 10 years now.
Hey, if you can, send me a couple of charts that are examples of that, and I'll put them in.
Sure.
I'll put them on the listing here on the show notes so you can actually see it. That would really help. And it makes complete sense because the market is going to fake you out whenever it can and whenever you let it, right?
The market has the ability to fake out most of the people most of the time.
Yeah, that old thing, you can fool some of the people some of the time, most of the people all the time, but you can't fool all the people all the time. Well, the market can fool all the people all the time, and it does. We've seen it. You have those nice up years like we had in 18 and 19 where it was really no decision investing involved at all. And then we get 2020 and all those gains just evaporate in the blink of an eye. And that's what you need to avoid.
Yeah, and the irony here is that, the markets are basically a voting machine, right? So people are either buyers or they're sellers. There's really just two sides. And that's the funny part about it. You would think just flip of a coin, you could do better, but it just has that way of getting everybody, brainwashed, and everybody is so conditioned to just follow what they're listening, and it really just comes down to the herd mentality. And that's where we are in life. It's always been that way, and it will always be that way.
Yeah, I couldn't agree with you more. Well, anyway, we didn't mention it before, but questions, comments, just direct them to me, KL@KerryLutz.com. That's KL@KerryLutz.com. And we will share them with Nick just like we did today. And make sure you go over to Nick's site, inthemoneystocks.com. Inthemoneystocks.com. You'll see Nick's impressive trading record there, as well as a lot of free educational materials and a great offer to get involved, get started right away. Nick, I got my Interactive Brokers account opened up. I like them because, well, A, they're from Greenwich, Connecticut, so there must be some huge, huge money behind them. And B, you've got like Canadian stocks, international stocks out there, warrants, everything. I'm not endorsing them. They don't pay me any money. I'm just saying their platform is very impressive.
Yeah, great company. I think that's Thomas Pelfrey's company. So he's a real real brilliant man, and Interactive Brokers. It really is a good platform. I don't use them personally, but I will look into that.
Yeah, it's a real simple platform. You can do these trailing stops. You can do all this stuff, and the technology just seems to be for non-professionals. And you are a professional, let's face it, Nick. But for non-professionals, it really looks really powerful. I just got this thing from a friend of mine. I'm not going to mention names. $600 ounce silver on the doorstep, but it's not a good place to live. So anyway, I thought you got a kick out of that. So inthemoneystocks.com, we will resume where we left off tomorrow with the daily market wisdom with master trader Nick Santiago. You know, in some ways, Nick, I think master trader really isn't enough of a description as to what you do.
It's Nick Santiago is good enough for me.
Well, it's just master, yeah, but it's beyond mastery. It's just living the market, and it's amazing that you've been able to do it and that you're sharing it with others. I tell people, Nick could be running billions of dollars, but you know, you would have the most miserable life on the planet.
Well, my mentor was William Delbert Gann, and he wrote books that are very hard for a lot of people to decipher. And one of the things that he wrote in one of his books, and I'll never forget, and I always keep this book right on my desk. And he says, everyone who writes a book has some definite aim or objective. Some write to relieve pent-up emotions, some for financial gain, others for fame and ambition. But the writer who does the greatest good for his readers and for himself is the man who writes with a sincere desire to help others. Yeah. And that's actually why I do it.
Yeah, and hey, we know you're following. It's remarkable, and you really have helped people. That's why I got involved with this. I told you I was about to rebrand in a month. I was going to change it from Financial Survival Network to something else. Then all this happened, and I said, okay, well, I know what I'm doing again. I'm refocused and try to help people make the most of what's really a bad hand, and can really be a bad hand if you don't play it right. So you got to play it right, and that's why you need to go to inthemoneystocks.com. Questions, comments, again, KL@KerryLutz.com, Twitter feed @KerryLutz, Facebook page is Financial Survival Network. We've also got a page for the stimulus package, Stimulus 2020 info on Facebook, and, of course, the regular site, financialsurvivalnetwork.com. Nick, we'll talk to you tomorrow. Thanks so much.
Thank you.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.